All right, let's dive right in. Today, we're going to pull back the curtain on a really powerful concept, something the pros use to see what the market is really trying to do. It's called open float, and it might just change how you look at your charts.
Welcome to AI Explains ICT. In this video, we're jumping into the core content from Month 5, Episode 4. We're going to break down exactly how the big institutions, the smart money, actually see and navigate the markets. It's a whole different ballgame.
So here's the game plan for today. First, we'll talk about the market's hidden targets. Then we'll get into what open float actually is, and more importantly, how you can map it out. After that, we'll learn how to decode institutional order flow. I'll show you a powerful little confirmation clue, and finally, we'll wrap it all up into a trading framework you can actually use.
Okay, let's get started. The very first thing we have to do is kind of shift our mindset. We need to stop seeing the market as just a bunch of random noise, those squiggly lines on the chart. Instead, we need to start seeing it for what it is, a playing field with very, very specific targets. So let me ask you something, and be honest. Have you ever looked at your charts and just thought, why does this feel so random? I mean, one day we're rocketing up, the next day we're falling off a cliff. It's so easy to feel like you're just guessing, right? Well, here's the thing. For the big players, we're talking the huge funds, the institutions, it is not random. Not at all. They're moving with a very clear purpose. They're hunting for one specific thing: liquidity. And where do they find this liquidity? Well, it's gathered in specific spots we call liquidity pools. Now, don't let the name scare you. It's just a big pile of orders. Think about it. All those buy stops people place right above a recent high, and all those sell stops waiting just below a recent low. These pools are like giant magnets for price. The market is just drawn to them. Okay, so if these liquidity pools are the targets, how in the world do we find them? That's the million-dollar question, right? Well, the answer is the whole reason we're here. It's a concept called open float. Think of it as the professional secret map to the entire market. So what is open float really? At its core, it's a framework based on time. It's a system, a way to pinpoint the highest high and the lowest low, where those big, juicy, institutional liquidity pools are probably sitting. And let's be clear, this isn't about a crystal ball or predicting the future. It's about mapping what's happening right now. And the magic number for this map? It's 120 trading days. Yeah, that's the specific window the big institutions use to frame everything. And now, we're going to break down exactly how to build this frame for yourself. All right, enough theory. Let's get our hands dirty. How do we actually build this map on our own charts? I'm going to give you the step-by-step blueprint right now. It's actually pretty simple. First, you anchor yourself to today's date. From there, you look back 60 trading days. Easy enough. But here's the part most people miss, the institutional secret sauce. You also project a window 60 days forward. Why? Because this creates a consistent revolving frame that's always current. So now you have this 120-day window. All you have to do is find the absolute highest high and the absolute lowest low in that entire range. Boom. Those 2 points? That's your map. Let's look at an example. See this chart? This is the look back part we just talked about. We've highlighted the last 60 days and marked the highest high and the lowest low. See them? These are the immediate known targets. These are the liquidity pools that the market might be gunning for right now. Now, what's cool is that inside this big 120-day frame, you can zoom in. ICT breaks it down into smaller timeframes for analysis. So you can look at the most recent 20-day high and low for a near-term view. The 40-day range gives you more of a short-term picture. And that full 60-day look back we just did, that's your intermediate-term perspective. It just gives you different layers, different ways to see what's happening. Okay, so you've got your map, you know where the targets are. Now what? Well, the next step is to figure out which way the traffic is flowing. This is where we start to decode what ICT calls institutional order flow. This is how we read the market's mind, its true intention. And you know what? It's way simpler than it sounds. If you see the market constantly pushing up, taking out those buy stops above old highs, what does that tell you? It's bullish institutional order flow. And on the flip side, if you see price repeatedly diving down to smash through the sell stops below old lows, you guessed it, that's bearish. You're just watching to see which side of your map is getting all the attention. And ICT himself says it perfectly. He says, if you notice that the buy stops keep getting hit, institutional order flow is bullish.
It's not a prediction, it's an observation. You're not trying to guess, you're just looking at what the market is doing and getting in sync with that powerful underlying momentum. Take a look at this chart. It's a textbook example. You see how price makes a low, and then wham, it rallies up and takes out that previous high. Then it pulls back a bit. And then what does it do? It rallies again to clear out the next set of buy stops. This isn't random. This is a systematic raid on the buy-side liquidity. It's screaming bullish institutional intent. Okay, you ready for a pro-level tip? For anyone who wants another layer of confirmation, another piece of the puzzle, ICT points us to a really powerful clue from the futures market. And that clue is open interest. When you learn how to read this, it can give you some serious conviction at those critical price levels. Okay, you really need to see this relationship on the chart. Look here. Price is dropping like a rock, right? It's heading into a key support level. But look at what happens to open interest at the same time. It just collapses. It falls off a cliff. This is a huge clue. It's telling you that the smart money is not selling here. In fact, they're taking their sell orders off the table entirely. So let me break down this reversal signal for you. It's really powerful. Step 1, price drops down to a key support level you've already mapped out. Step 2, at the exact same time, open interest takes a nosedive. ICT says to look for a drop of more than 15%. What does this combo tell you? It's screaming that there are no sellers left. And hey, if nobody wants to sell down here, what's the path of least resistance? It's usually up. Okay, so we've covered a lot. We've talked about the targets, how to build the map, how to read the flow of traffic, and even how to get confirmation. So now let's pull it all together into a simple, actionable framework that you can start using right away. Here it is, your open float checklist. 4 simple steps. Number 1, always be mapping that revolving 120-day range. Remember, it's not set it and forget it, it's always moving. Number 2, pinpoint your liquidity pools, the highest high and the lowest low. Number 3, watch the market like a hawk. Which side is it attacking? That tells you the institutional order flow. And number 4, for that extra confidence boost, look for that open interest confirmation when price hits a key level. Look, this whole framework is about giving you a blueprint. It's about letting you see the market the way the institutions do. It takes you out of the guessing game and turns you into an observer. So I'll leave you with this question. Now that you have the blueprint, what are the charts really going to show you?
Hey, if you got some value out of this video, do me a favor and hit that like button and subscribe for more breakdowns just like this one. And seriously, if you have any questions at all, just drop them in the comments below. A real person will get back to you. Thanks so much for tuning in, and as always, safe trading.